Another crazy week, and just for everyone to kind of put things in perspective, Monday morning, First Republic is no longer a bank. Think about it. Monday! That's how fast things go on the stock market. Are you ready for another weekly summary? Let's go. Hi everyone, and welcome back to the channel. I'm Micha Stocks from our channel Stock Talk with Micha Stocks, where we talk about stocks, we talk about companies, we talk about all the financial news. And a quick reminder to everyone, anything and everything that you see here is not financial advice. It is only for entertainment and educational purposes only. Everything happens on our channel, where you can, of course, subscribe, share with your friends, so more and more people can keep on getting updated on everything that happens in the stock market. Let's directly dive in. This is what happened in the major averages during the last 5 days. We have the Dow down 1.4%. We have the S&P down almost 1%. NASDAQ, saved by Apple, up 13 of a percentage point, and Russell down 1%. Still, year to date, Dow is up only 1.6, S&P is up 8.16, NASDAQ is up more than 17%, and Russell up 0.5%. When we look at the crypto market, Bitcoin is up on the week 2.4%, and ETH as well. Year to date, the chase after safe or stable, let's call it, coin brought Bitcoin up 73%, and Ether is up 57%. When we look at the different sectors, technology barely staying in the green, utilities and healthcare as well. But when you see on the flip side, energy down 5.7%. Is this the end of the oil? Is this the end of energy? We'll see in the next few weeks. Then communication, then financials, then materials. And of course, when you even dive in deeper than that, you can see gold miners up 5.4%. If Bitcoin is up and gold is up, it means that everyone's afraid. On the flip side, regional banks down 10% in average. We'll see the regional banks in a second to see how far they went down or how much they went down in the last 5 days. When we look at our heat map, this is how it looked like. Mainly red on the screens. We see green, a bit of green, mainly on the big companies, which keep holding the averages up by a thread, but underneath there's a lot of carnage, and it's starting to hurt more and more the major averages. And if we talked about oil, we talked about energy. The oil market started with a barrel of oil 76.6, dropping all the way down to 66.6, which is more than 10% drop. This is the last 5 days, and then going up to 71.27. Every time we think it's the end of oil, Saudis come and reduce the output, and then the oil jumps up high. Let's dive in directly to the news. This is Kaylee Lentz from Bloomberg. Everyone's talking about the debt ceiling. Schumer, Jeffries, and Yellen, of course, try to push the Republicans to sign a clean bill in order to increase the debt ceiling. Janet Yellen, looking at the taxes being paid, gives an update this week that June 1st, the U.S. government will not have money anymore, which means that, at least according to the White House, these might be the implication. More than 8 million jobs lost. Stock market can drop more than 45%. Now, I'll do something here just to calm everyone down. The White House right now is trying to push the Republicans to lift the debt ceiling without any conditions. In order to do that, they're marketing the damage. Now, will there be a damage if the debt ceiling would be met and America would default? Of course. Will there be 8 million job losses and 45% drop in the stock market? Well, it might happen, but it won't happen in one day. So if you're now saying, oh my God, I got to pull everything out because Armageddon is here, I'm not so sure it would happen in one day, but no doubt this is top of mind for every government official, Right now, everyone's afraid of the implications. And why am I putting everything with a grain of salt? Well, since 1959, and thanks to our dear friend Ryan Dietrich, 89 debt ceiling increases since 1959. Republicans in blue, Democrats in blue, Republicans in red. You can see that every president, every party lifts the debt ceiling. Now, is the debt too big? Yes, but in Nixon time it was too high anyway. Ford it was too high, Carter it was too high, Reagan it was too high. Anytime in history you look back, it was too high, and they still lift the debt ceiling. So put everything into context. What else we had this week? Wednesday, Fed raised another 25 basis points against everything that the market is shouting at the Fed, stop increasing rates. The Fed keeps on raising rates, and the nominal rate right now is between 5 to 5.25%, which is a very, very high rate, which we got to rapid, and that is a problem that is being created. The bond market looks ahead and says this is not sustainable. The Fed is going to drop rates, and they've actually mapped it out. And you can see here the dates between June, July, September, November, December, and January. They see the rates going down, if we look at the end of January, to 4.1%. We are now at 5.525. That's how the bond market is seeing the world. This is how the Fed sees the world. So, who's going to be correct? We'll see in the next few months, probably. U.S. labor statistics came on Friday, and non-farm payrolls came hotter than expected. The expectation was 180 new jobs created. Actually, 253,000 jobs were created. Now, in a regular world, new job creation is amazing. It's great. But currently, the unemployment rate in the U.S. is 3.4, which is very low. The Fed said that they want to increase this number. The Fed wants more unemployment, mainly to reduce the stress of inflation. So when you look at these numbers, you're like, that's a problem. But when you look at this, what the stock market did on Friday, stock market went up. Why is that? Well, Kathy Jones from Bloomberg, Charles Schwab, put this on a chart, and she shows the following. She shows the new jobs creation, or the jobs opening, as you can see them. Okay, now we're going up in the April month, but two things are happening. One is average salary coming down, which is good. Second thing is there's something called a revision. After about a week or two, these numbers get revised. Usually, they're revised down. Now, let's go back to this number. Let's assume the number would have been 160,000 non-farm payrolls. The market would have said, oh, that's great. That means that the Fed is not hiking any more rates. And they would rally, which is exactly what happened on Friday. How did they know? They didn't know. They assumed that it's going to be revised downwards. And that's why we're seeing everything we're seeing right now. So in the next few weeks, we'll know exactly the numbers. Companies that reported this week, we can see across the board, we had Uber with a very solid report, AMD, which kind of frustrated the investors by not increasing their forecast. But on the other hand, two days later, a Bloomberg article says that AMD right now is designing Microsoft the new AI chips. Starbucks got also hammered a bit after their report because they didn't increase their forecast. And others, we saw Qualcomm delivering a report that says that they have a reduction of 17% in orders for smartphones. Apple doesn't see the sales coming down, so it might have been Samsung or others. What else did we see interesting? Of course, Shopify. We're going to talk about Shopify in a few, and Apple. Apple keeps generating more and more revenue. Their iPhone sales keeps going up. Recession or no recession? And some might say that Apple is still holding the market. Let's dive into things that happened this week. JP Morgan takes over First Republic as the biggest US bank. They won the bid. And Jamie Dimon is quoted saying, this part of the crisis is over. Well, there is a problem with this quote. This is the 5-day performance of the regional banks. PacWest down for the last 5 days, 43%, almost in half, cut in half. First Horizon canceling the merger deal with TD Ameritrade, dropping 37%. Home Street, 35%. Metropolitan Bank, 28%. First Foundation. Now, will these banks rebound and bounce back? Yes, no, nobody knows. But I think that this quote would be discussed a lot of the part of this crisis is over, because for these banks, it's far from being over. Meta uses the fact that the stock went up year to date by about 140% and raises money by selling debt. In other words, using the high stock price to generate more cash, which they should have done. Charlie Munger said that the U.S. commercial property markets is in trouble, which makes a lot of sense because interest rates are up, mortgages are up. When companies would want to refi their mortgages, it's going to cost them more. The rent is, the occupancy is smaller. Well, usually that's what happens. But something that doesn't go down, only goes up, is AI mentions. Look at this chart of AI mentions in big tech earning calls. We see AI mentioned more and more and more, 20, 30, 40, 50, 60 times in an earning calls. This is how the S&P 500, 25% of the companies mentioned AI. That's crazy. Everyone is knees deep in AI. IBM is roughly, or saying that roughly 7,800 jobs can be replaced by AI, and they're not going to recruit people instead of them. Chegg, which is an educational company, dropped after their earnings by 50%. Half of their value was cut because they say ChatGPT is hurting their business. Lisa Su, AMD CEO, says that the company is seeing AI interest from every customer in every industry. Dropbox is laying off 500 people and also pivoting to the help of AI. This is their CEO that says, look, we're not replacing people only with AI. The ones that we're keeping, they're going to be empowered with AI to do more through ChatGPT 4 or Bard or anything else developed by that. Snapchat, everything is only this week. Snapchat is already testing sponsored links using My AI chatbot, and even Vice President Kamala Harris had a meeting this week where President Joe Biden even came in for a few minutes with CEOs of Google, Microsoft, OpenAI, and others to talk about AI, the implications, and of course creating those guardrails to make sure that we're being protected with all this new technologies. Goldman Sachs came out with a research saying that 25% of all industries will be impacted by AI and automation. Leading that is, of course, office and admin support, then legal, then architecture, and construction and building as well. That's it with AI. Rivian, I wish they're going to say this week, they're going to report this week, we're going to see it AI, because right now their stock is in big, big trouble. Their cost per vehicle is very high, their margin is low, and if they don't come up with a rabbit out of the hat, they're in deep trouble. Same for Lordstown Motors, ticker RIDE, said they're going to be the first one to deliver a pickup. Well, they're probably not going to be the first one to deliver a pickup, and they might not survive. They're warning of a bankruptcy after Foxconn threatens to walk away after finding out what happens underneath. Morgan Stanley is letting go of about 3,000 jobs, 5% of their workflow. And Hindenburg, which is a short seller, they create researches against companies and they open a big short position and then they publish, and the company, usually the stock of the company, drops. Well, they did this to Carl Icahn. Why is this, let's say, something funny a bit? Because Carl Icahn shorts other companies. So shorting a company that shorts companies, is that a good thing or a bad thing? I don't know. But as a result, IEP, which is The ETF following Carl Icahn Enterprises dropped 43% from the moment that the short seller report was out, and actually gaining half of it back, but still a huge impact on Carl Icahn, a billionaire, of course. Tesla keeps playing around with prices. Once inventory is up, they reduce. Once inventory is down, they increase. And they keep on playing around with prices. It's a very interesting way of managing car prices. Looks more like airfare than car prices. Very interesting. Coinbase, fed up with the SEC, with the fact that there aren't clear rules on what's allowed and what's not allowed, saying we're taking our platform international and that's it. And they're launching their Coinbase International Exchange and starting to trade Bitcoin and ETH. I see them by end of the year taking all their business outside of the US if this keeps on going. Tim Cook and Apple offers more than 4% APY on your money. Saw an inflow of $1 billion. Mainly you can open a savings account through the Apple Pay, transfer money there, not do anything, and get over 4% interest on your money. Remember, this is not financial advice. Check if that makes sense for you or not. And San Francisco is a big mess. A lot of crime going on in downtown. And you can see that Nordstrom and also Chipotle and other companies are closing shop. Whole Foods closed there, 3 or 4 shops there, because they can't keep on with all the theft and the crime there. Eli Lilly with an experimental drug showing the slowness of Alzheimer. This is very, very good for, of course, Alzheimer patients and for Eli Lilly. And the stock performed very well, breaking 52-week high over and over again. Google employees start complaining about their CEO's pay raise. Well, when employees start complaining about their CEO pay raise, it means that someone is in the hot seat, and that's not the employees. So that's Google. And Shopify did a few things this week. First of all, they released their earnings earlier than expected. They were supposed to release it Thursday after the bell. They released it Thursday before the bell. They're offloading their logistics business to Flexport. They're taking it out because it has lower margins. Third, they are reducing 20% of their workforce. The market, and of course, the results were solid. Market loved it. Stock went up 25% the first day, which is Thursday, and on Friday went up another 8%. Amazing day, 2 days for Shopify. And Maersk delivers 1/5 of the world containers, and they're saying that they're seeing reduction of volume by 9.4%, meaning that if the biggest freight container is seeing a drop in volume and drop in price, you can probably understand what will happen if there's a recession and other fears as well. Kathy Wood from ARK says that the credit crunch is going to get much more serious. And actually, it makes a lot of sense. Banks are in pressure. They're not going to lend to anyone. If they're not going to lend to anyone, less money is in the system. Money funds, we're going to see it in a second, are taking money out of the financial system. All these together create a situation where loans are not given. And if loans are not given, then people are not buying new things. Businesses are not surviving, and that's creating a credit crunch. Logically, it makes a lot of sense. Is it good? No, it's not good. Should the Fed react to that? Of course. But the Fed currently doesn't care that something would break. The first thing they want to break is inflation. Because fixing a credit crunch is very easy for the Fed. Reducing inflation, as we can see, takes a lot more time. And this is a nice anecdote by Charlie Bilello, which shows the sales 10 years ago of GM, 151 billion, Ford, 137 billion. Sales today, GM increasing a bit, Ford increasing a bit, Tesla from almost nothing to $86 billion in sales. And when you look at their net income, which is how much money they make after expenses, you can see 10 years ago, GM made almost the same as today, 6.19, Ford 5.8, dropping it to 3 billion, and Tesla from a loss gaining 12 billion. If you forecast 10 years ahead, these numbers would probably be a lot different. Think about that. And J&J took KenVUE. They took a lot of their small brands, they combined them under KenVUE, and they IPO'd. 2023, the biggest IPO since Rivian, happened just this week. How a stock is born. So KenVUE was born, ticker KVUE. It has Tylenol and other brands underneath, a Band-Aid. And actually, they got a higher valuation than their valuation. They were supposed to launch at $22 per share, and they launched at $25.53, which is valuating them at $48 billion. And this is a problem for the whole market. This is a money market funds chart, which shows that money is being drained out of the system toward bonds. And when it's out of the system toward bonds, it means that the banks have less money to lend. Remember the credit crunch? This is part of it. Now, this is good for the depositors, which don't basically deposit. They just move their money to money markets. But it's bad for the banks. It's bad for the financial system. This will, if it continues, will create the credit crunch that everyone is waiting for. And that is everything that happened this week. Are you ready for next week? Because if you thought that we were done, you were wrong. This will happen, as usual, on Tuesday, on Wednesday, the 10th. CPI, Consumer Price Index. Everyone is waiting for the Consumer Price Index for April to see the continuation of the drop and increase of prices. Will we see a negative number? Will we see this all items keep going down, or will we see an increase in prices and more fuel to the Fed to keep rising rates? We will see that during the week. Also this week, on a Thursday, we will get the core PPI. That's also happening this week. Inflation, of course, is coming out on Wednesday. PPI is coming, which is the Producer Price Index, is coming on Thursday morning. And those are the major things we're going to see this week, except, of course, the most anticipated earning releases. We will hear from Tyson and Six Flags and Dish and PayPal and Palantir and Devon and Lucid. We will hear from Fisker and Nikola and Under Armour, Airbnb, Rivian, Oxy, Twilio, Roblox, Wendy's, Teva, Disney, The Trade Desk, Unity, and others. We will hear from JD, from Fiverr, from Krispy Kreme, and of course from SoundHound, Indie, and others. We are now winding down. You can see the size of the companies are becoming smaller, except NVIDIA, which will report the week after. And let's end with the S&P. SPY, as you can see, is right now in that channel of 4,000 and 4,200. Now, there are basically two options here. The S&P cannot stay here long. It doesn't stay at the same place. If it drops, it means that this breakout isn't really happening and we are back on a downward spiral. Sell in May and go away is a known term. Maybe that might be what's gonna happen. But breaking upward and breaching the 4,300 will create a technical setup which is called higher highs. You can see, let's assume it's gonna break around here. So we have higher highs, we have higher lows, meaning that we are in an upward channel. Will it happen? We will see in the next few weeks. We will be here every week to summarize everything that is happening in the stock market. If you enjoyed what you saw, it would be amazing if you can smash that like button. Share it with your friends. Not a lot of people know everything that happens here in the news, and maybe they will even enjoy it. Till next time, till next week. See you later. Bye-bye.